Bismillahirrahmanirrahim. Today I'm going to solve accounting paper 1 multiple choice question for the Cambridge O level. For the session of October-November 2023, we have a subject code of 7707 and the variant is 13. Variant is usually 12 for here, but somehow it is written 13. So when I have taken the print, so I started to solve it. It has 35 marks and we have 1 hour 15 minutes for the paper time. Now we will start from the question number 1. Which action does not reduce the owner's capital? Business expenses paid using a personal check? Oh yes, when a businessman or anyone is using his personal check to pay the business expenses, its capital does not reduce. So it means it is adding additional capital, so its original capital would not reduce. So option number A is the correct option. We will read other option. Cash withdrawn from the business bank account for the person used. It's a drawing. Goods taken from inventory for the person used. Again, it's a drawing. Personal expense paid using business cash. So all these options are wrong. Now we will move to the question number 2. Which statement correctly describe the accounting equation? We know that we have the accounting equation. Assets is equal to capital plus liability. All those written in terms of capital. So we can rearrange it, then is capital is equal to asset minus liabilities. So option number A is the correct option. Capital is equal to asset minus liabilities. This was the simple MCQ. Now we will move to the question number 3. What could a credit balance on a ledger account represent? Credit balance means we know that when we are gaining something, it's our capital is increasing, and capital increase or profit increase, it means that it should have a credit in nature. So accrued income is a debit, asset is also debit, expense is debit, only prepaid income is the right answer for this question. This was again an easy question. Now we will move to the question number 4. Aiden purchased goods from J and paid for the bank paid for them by bank transfer when he received a statement of account. This is a crucial information that he received from a statement of account. J says he has not received the payment. Which document would help Aiden to check that he made the payment? Obviously bank statement is the statement which he need to check. So option number A is the correct option. Check counter file, yes, it could be, but no detail is given. Bank statement show the full information. Paying in slip, this is the wrong. Petty cash voucher, this is the wrong. So only option number A is the correct option. Now we will move to the question number 5. At the end of the month how is the total from the sales journal recorded in the ledger? Okay, it credited to the customer personal account. We need to look at that information for the sales journal record ledger. We know that sales journal record it should be into the credit sales. So his personal account is the wrong. Sales account is the right option. Personal account again not. Debited to the no. Sales has a credit nature, so it should be credited. So option number B is the right option. Now we will move to the question number 6. First 5 MCQs were quite easy and simple. Accounting concept was needed for that, and very simple and brief accounting concept. Now we will move to the question number 6. Question number 6 has brief calculation. A customer paid 15,600 to a supplier after receiving 2.5 you can say cash discount and a trade discount of 20%. What was the amount invoice entered in the purchase journal? Okay, examiner is asking us about the invoice that should be entered in the purchase journal. We know that invoice that should be entered in the purchase journal, it should be before receiving this discount. So what we gonna do that, and this is the extra information which you have been given to just to make you confused. Okay, so how we will do that? We need to get our answer before adding this cash discount. So if we subtract 100 minus 2.5, then it means that it would be equal to 97.5%. So 97.5% is showing this figure 15,600. We need to convert it into the 100% to get the value of the invoice that should be entered in the purchase journal. So how we gonna convert that? Okay, 15,600 is the amount that is showing the 97.5%. Why it is showing 97.5? Because 2.5% of cash discount is received, so it has been deducted. If it hasn't been deducted, it should be shown 100% and divided by 97.5. Simple mathematical concept is applied here. After solving this, we're gonna get our answer 16,000. So which option is of 16,000? Option number C is the 16,000. Now you look at clearly about this calculation. You can take the screenshot of it and you can solve it completely. Now we will move to the next part of the question. Question number 7. A trader maintains a petty cash book using the Impress system. The impressed amount is $120. The petty cash transaction during the month of June were received from the customer $21. This is the important information. Impress amount is 120 and at the end of each month it should have contained $120. So payments are stationery charges, postages, cleaning and payment to the supplier. So 120 was already at the start of the month and we receive this amount, so we're gonna add 21 and these were the payments, so we're gonna subtract 25, also 10, also this was payments of cleaning and this is a payment to the supplier. We also gonna subtract. After adding 120 plus 21 minus 25 minus 10 minus 20 minus 40, we would left with 46 amount. So how much should be given to the Impress system? Impress system is total of 120. So we're gonna subtract 120 minus 46. Answer would be 74. So he should be adding 74 to complete this amount of 120 at the start of each month. This is how we have calculated. This was again simple question of Impress system. Now we will move to the question number 8. Question number 8 is of trial balance and I know you can't see that, so I'm going to read the first statement. Paula's trial balance contains errors. Now you can see that, you can see all the options and the table clearly and the trial balance is given. So first we're gonna see what is the corrected trial balance. Fixtures and fittings should be debited and it is debited. Light and heat should be debited. Purchases should be debited. Insurance should be debited. So these are the right amounts. Sales should be credited and trade payables should be credited. There is no error in that. Trade receivables should be debited and they are in the debit account. Bank overdraft. Bank overdraft has a nature of credit, so it is wrongly added in the debit. So it should be added over here with the value of 1000. Now capital is added on the credit side. This is again the right. Drawings have a nature of debit balance, so it should be added in the debit amount. So after adding these values, we're gonna get the trial balance for debit side and the credit side. The answer would be 24,500. You can add all these value and you can all add these credit value. The answer would be 24,500. So option number B is the correct answer over here. Only two adjustments were required. Bank overdraft was wrongly added in the debit account, and drawings were added in the credit side of the ledger. So we have corrected those mistakes from the trial balance, and the total is 24,500. Now we will move to the question number 9. We have the question number 9. The following entry was made in a journal to record the correction of an error. Debit Wasim is showing 320, credit bank is showing 320. Okay, which error has been corrected? Okay, a check of 160 was credited to the Wasim account, but no debit entry was known. Actually, the entry is made in the debit and credit both the sides. So this is the wrong option. This is the option of suspense account. So option A is wrong. A check of 160 was debited but no credit. Again, this is the wrong, because this is the statement for the suspense account. Part C. A check paid to Wasim 160 was credited to his account and debited to the bank. This is the correct statement in which both the double entries are making the correct amount. So we're gonna select this option C. We're gonna read: a check received from Wasim 160 was credited to his account and debited to, no, check is paid to the Wasim, so that's why over it is credited to his account. So option number C is the right option, and A, C and D, A, B and D are the wrong option. Now we will move to the question number 10. Question number 10 belongs to suspense account. This statement correctly describes a suspense account. It is an account open to check for errors in trial balance. No, the purpose is not that. It is a permanent account. No, it is a temporary account. So permanent here is wrong. It is a temporary account. This information is correct. Used to correct errors of complete. No, it is not used to correct error for half part of the statement. C is correct. It is an account that is open when the totals of trial balance disagree. Yes, this is the right option. Option number D is the correct purpose of suspense account. So I'm gonna select option number D. Now we will move to the question number 11. A trader prepared a draft income statement which showed a profit of the year 36,000. Okay, we have a starting profit of 36,000. Okay, drawings made by the owner of 900 had been debited to the wages account. So this is wrongly done, so this amount should be added, and the provision for the doubtful debt was increased by 220 at the end of the year. The income statement was charged at the provision of 260. So was charged at 260, instead it should be charged 220 only. So 260 minus 220, 240. So this should also be added because it is extra charge. The total of the discount allowed column in the cash book 140 for 1 month had not been debited to the cash to the discount allowed account. So it should be deducted minus 140. So after taking those calculation, 36,000 plus 900 plus 240 minus 140, the answer would be 37,000. So option number C is the correct profit for the year. Now we will move to the next question, question number 12. Question number 12 is that Alyssa's cash book showed a debit balance of 100 on her bank account. So we have a debit balance of 100. She compared her cash book to the bank statement and updated the cash book for the following items: credit transfer to credit supplier, credit transfer from the credit customer, bank interest paid, $19. What was the debit balance on the bank account after the cash book got updated? So we're gonna make the updated cash book, or simply you can say you are making bank account, or you can write cash book. We have been provided with the debit balance of 100 at the start of our statement. So we're gonna charge it with 100 on the debit side. Okay, now the credit transfer to a credit supplier, that is 80, so it should be on this side. Credit transfer from a credit customer, it should be added 112, and the bank interest paid, it should be reduced 19. Taking the total of both these sides, 212 and 99, after subtracting, we're gonna get that balancing figure here, which would be 113. So option number C is the right option, $113. So this is how we have calculated question number 12. Now we will move to the question number 13. The balance of cash book shown in the cash book of 1200, the bank statement at the same time, the bank statement at the same date shown the balance of 1140. We have the cash book balance, that is 1200. We have the bank statement of 1140. After subtracting 1440, we can know the difference between those two. It would be 240. Okay, what could explain the difference? Payment to a supplier entered on the wrong side of the cash book. If payment is entered, it should be increased, so this is the wrong option. Bank charges 240, not in the cash book, again this is wrong. It would reduce the balance. Checks to the supplier 240, not yet. Yes, this is the right option. It means that we have sent the check, so we have deducted in our cash book, but bank didn't receive that check for the payment, so bank statement is not showing the updated account. So this is the right option. Option number C is the correct option for this question. Now we will move to the option number D is obviously wrong. We don't need to read that. Now we will move to the question number 14. Jane wished to make contra entry between a sale ledger control account and a purchase ledger control account. We know that nature of the sale ledger control account is debit, and purchase ledger control account is debit. So what is the contra entry here? Contra entry would always be here. We're gonna debit the purchase ledger control account and credit the sale ledger control account. So the credit entry was made correctly. So this the credit entry has been made correctly. It means sale ledger control is correctly added, but the debit entry in the sale return account in an error. So it means that it has a problem in purchase ledger control account. So option number C and D are wrong option, because it's showing the good effect in the sale ledger account. Now we will need to check which amount should be, which statement is corrected from option number A and option number B. Now we're going to read these options. Total purchase balances were overstated. We know that it is a contra entry, and the debit entry was entered in the sales return account. So it means that purchase ledger control account was overstated. So that's why, because the credit entry was made but the debit entry was entered in the sale ledger, so the credit entry should be here. So option number A is the right option, in which purchase ledger balance is showing the overstatement. Now, which transaction is a capital expenditure? Capital introduced by the owner, payment of wages, and purchase of a new computer. Yes, this is a capital expenditure, purchase of a new Option B and C, B and D repair of equipment is of revenue expenditure, and option number A is for the capital receipt, not the capital addition of the capital. So only purchase of new capital is the purchase of a new computer is the capital expenditure. So now we will move to the question number 16. This was an easy question. Okay. Sale return were incorrectly recorded as the purchase return in the income statement. What was the effect of this error? So what would be the effect? Purchase return incorrectly added. Purchase return means purchase cost will increase, so cost of purchase returns mean cost of sales would reduce because purchases were less, and it will increase the gross profit or profit for the year. So what effect it should be? Profit of for the year would be overstated by this statement. So option number D is the right option. Capital employed had no connection with it. Cost of sale were overstated. No, you know that cost of sale were under, and gross profit was understated. No, gross profit is overstated. So option number D is the right choice. Okay, what is the moving to the question number 17? What is the reason for charging depreciation on a non-current asset? This is a simple depreciation definition. Why we take a charge to build up a fund of money that can be used to replace the asset? No, this is the wrong option. To charge the cost of the asset over the year which benefits from its use. Yes, this is the purpose. So option number B is the right option. This is the correct definition of depreciation. To ensure that profit is not understated. This is a non-cash expense to show the asset in the market value in the statement. No, this is again the wrong option. Now we will move to the question number 18. Which non-current asset should be depreciated using the revaluation method? Okay, first I'm going to tell why we use revaluation method. We use revaluation method in only those cases when we have the asset when we have too many assets of the same size and the same value, and we cannot charge a depreciation on a single unit. So that's why we use a revaluation method for the whole set of that equipment. Option number A, loose tool. Yes, this we calculate for the whole. We do not calculate for one unit for the depreciation. Mines and wells, no. Motor vehicle, no. We use simple depreciation. Of equipment, we use simple depreciation. So revaluation method is used only for the option number A. Now we will move to question number 19. Question number 19 of disposal account. I'm going to make that ledger. A motor van originally cost 11,500 and had been depreciation by 9,000. The van was sold for 2,750. How should the profit or loss on the sale of the van should be shown in the disposal account? So we're gonna make the disposal account here. Original cost was 11,500 and depreciation, accumulated depreciation is 9,000, and it is sold at the price of 2,750. What should be the balance? So balancing figure would be here, and the balancing figure will be 250. After adding those value 9,000 to 750, it would be 11,750, and it should be 11,750. Subtracting 11,750 from 11,500, the answer would be 250. So 250 debit balance. Option number B is the right option. You can also calculate like that by doing simple maths. Adding 9,000 and 2,750, you would get 11,750, and subtract it from the value of the asset, that is 11,500. You know that you would get a gain in that case, or profit in that case, it would be 250. So we will move to the question number 20 now. Question number 20. Joseph sells goods on Okay. Joseph sells goods on the credit and maintains a provision for doubtful debt. He wants to increase his provision for doubtful debt by 400. Which journal entry records this increase in the provision for doubtful debt? Okay. Credit customer and income statement with 400. It's a provision for doubtful debt. He wants to increase it. So it would affect the income statement and it would increase the debit balance of the equipment, and provision has always the nature of credit. So option number A and B are wrong option, and provision has a nature of credit. So option number C is the right option over here. You must know that provision have always the nature of credit. What is provision? When you have the liability and you do not know its probable amount and exact timings of that amount. Now we will move to the question number 21. What is an advantage of operating as a sole trader? Being entitled to all profit. Yes, this is the purpose of doing a business. So option number A is the right option. We don't need to read other options. This is the simple question. Now we will move to the question number 22, which is again of calculation. Emma provided the following information at the end of the financial year. What was the profit for the year? Okay. Fees received from the 78,700. It should be added in rent receivable. 11,000 should be 78,000. Okay. Office expense should be subtracted, and motor expenses also should be subtracted. So we will not include the drawings. We don't need to include the drawings of 2,000. So what would be the profit for the year? It would be 60,000. So option number D is the right choice. Drawings would not be included. Okay. Now we will move to the question number 23. Question number 23 is again the calculation part. A trader provided the following trade data. Total purchases is of 25,301. Purchase return and carriage inward and goods taken for the on use. What was the net figure for the purchase in the income statement? So we need to so first we need to add this value, and purchase return it should be subtracted. Okay, and carriage inward it should also be subtracted. It's cost goods taken for on use drawing, it should also be subtracted. What was the net figure? After calculating the net figure would give you the answer 22679, and option number B is showing those figures. You just need to subtract purchase return, carriage inward and goods taken from the total purchases to calculate the figures which we use in income statement. Now we will move to the question number 24. That belongs to the partnership account. Pari and Era are in a partnership sharing profits and losses equally. This is it means they are the partners of 50-50. This is the important information. Interest on the capital balance is at 6% per annum. Pari is entitled to 5,000 per annum salary, and the capital account of the balance is the start. The year is 60,000 for Pari, and for Era that is 40,000. The profit for the year was 27,500. How much residual credit did the Pari's current account at the end of the year? So we need to calculate the profit for the Pari. So first we take the 60,000, 60%, 60,000 multiplied by 6 by 100. it would be 3600. So this is the interest, and 40,000 multiplied by 6 by 100, this would be 2400. This is the era's interest. Or now we need to subtract those values. 27,500 minus in capital interest minus 2400 eras and the salary that was entitled to pay of 5,000. The answer would be 16,500. And we know that they share profit equally. So 16,500 divided by 2, the answer would be 8250. So option number A is the correct choice. So this is how this calculation is completed. Now we will move to the question number 25. Which item is directly affected the dividend policies of a limited company? General reserve, no. Ordinary share capital, no. This is not affect. Preference share capital, no. Retained earning, yes, it will reduce the retained earning, so impact would be only on the retained earning. Now question number 26. What are the features of debentures? Return received. We know that return received in the form of interest only. So rate of return from the option number C and D, it is on the base. No, rate of return is always on the fixed rate debenture carry, and debenture doesn't need to vote. They don't have a voting right. So option number D is the correct option. Only the shareholders, ordinary shareholders, have the voting right. Okay, now we will move to the question number 27. How are the subscriptions received and subscription written off recorded in the receipt and payment account? Subscription received and subscription written off. We know that subscription received has a nature of, it is over asset, so it has a nature of debit balance, and subscription written off, the subscription that are written off should not be debited or credited. So it is shown in the option number D. No entry is made. So option number D is the right choice for question number 27. Now we will move to the question number 28. Okay. Park Golf Club had a shop that sold golfing equipment to its member. The treasurer provided the following information for the shop for the year ended 31 December. What was the shop gross profit for the year? 53,000 was selling figure, and returns from the customers are of the value of 200. So we're gonna subtract these two values to get the sales. Sales would be 5300 minus sale return, that would is 200. Answer would be 5100. Now we need to calculate the cost of sale. Cost of sale is calculated by adding opening inventory, which is of 400, adding purchasing equipment, that is of 2700, and subtracting closing inventory that has a value of minus 450. Carriage is also given, so it would also be added. So cost of sale would be 2750. We know that gross profit has a formula of sales minus cost of sale. So 5100 minus 2750. 5700 minus 2750. The answer would be 2350. 2350. So option number B is the correct option for question number 28. Moving to the question number 29. Okay. Which option contains only indirect cost? Carriage inward is a direct cost, so this is the wrong. Carriage inward again direct cost. Depreciation of machinery, yes, it is indirect cost. Factory rent, indirect when wages, this is the right option. Number C is the right option. We're gonna read depreciation of machinery. Raw material is a direct cost, so this is the wrong. Okay, now we will move to the question number 30. The capital of a business is higher at the end of year 2 and then it was in the at the end of year 1, so capital is higher in second year from the first year. No additional capital has been introduced. It means that company has earned some profit, that's why its capital in the next year or the following year has been increased. So what does this, the business had made loss? No. The business had made profit? Yes. Option number B is the clear choice here. Now we will move to question number 31. And be prepared, question number 32 and 34 are great barrier question or distinction question. These questions are challenging questions. Okay. First, we will solve question number 31. Rahat had maintained a full set of double entry records. She has details of all assets and liabilities at the start of the end of the year. At the start and end of the year. Which additional information does Rahat need in order to be able to prepare her income statement for the year ended? Income statement should carry the receipts and payments and the bank statement. So it does not need to show a statement of affair and the amount of her capital and the rate of inventory. So option number A and C, D are wrong option. Only require bank statement and summary of receipts and payments. So option number B is the correct option here. Now the great barrier question or challenging question is here 32. Toby's purchases for the year were 13,000. His closing inventory was 1,000 more than his opening inventories. Toby's gross figure is 20%. What was the Toby's revenue for the year? Okay, in this question there are many things that are missing. First, we need to calculate markup, but before getting the markup we need cost of sale. But for getting cost of sale we should have opening and closing inventory, but the opening and closing inventory is not given. If we need to calculate the cost of sale from the simple data, it should be opening plus purchases minus closing. We know that purchases value is given, that is of 13,000. But for opening and closing, no one vital information is given, which is that closing inventory is 1,000 higher than, so the difference between opening and closing should be of 1,000 value. And if this is 7,000, this should be 8,000. If this is 9,000, it should be 10,000. So it means that these values should have a difference of 1,000. So we're gonna subtract 13,000 from thousands to get cost of sale, which would be 12,000. So after getting the 12,000, we need to calculate the markup, but we have been given the margin. This is the trick. When we are given the margin, we need to subtract it from 100%. 100 minus 20, it would be 80. So we're gonna calculate it like that. 20 by 80 would be our markup here. So multiplying for calculating gross profit, I will show it here. For calculating gross profit, we will multiply the markup 20 by 80. I'm writing here, this is, I have calculated markup 20 by 80 to its cost of sale. Cost of sale we have calculated, that is 12,000. After solving this, our answer would be 3,000. So 3,000 would be our gross profit, but we need to calculate revenue. Again, the trick is hidden. So revenue, how we calculate the revenue? We know that cost of sales, by adding gross profit, we can calculate the revenue. 12,000 plus 3,000, answer would be 15,000. So the gross profit would be 15,000. So option number B is the right option. First, we have calculated cost of sale from purchases and the difference between opening and closing, which was 1,000, and why we subtracted it, because closing inventory was greater, has a greater value of 1,000. Okay, so we calculated cost of sale first, 12,000. After calculating cost of sale, we calculated markup from the gross margin. How we calculated a markup? By taking the difference of 100 minus 20, it would be 80, then divided by the given margin, 20 by 80. This is our markup value. Then getting the markup value, we have multiplied its markup value to cost of sale to get the gross profit. After calculating gross profit, we have added its value into the cost of sale. After adding cost of sale and gross profit, we have get the required answer for the revenue. Now we will move to the question number 33. 33 is like that. CD Limited took out a long-term bank loan and used the part of the funds to pay some of its credit supplier. How did the affect that payable turnover days and the return on the capital employed rose? We know that we calculate ROS by dividing operating profit to capital employed. So how did they affect the trade payable return? We know that it would trade payable returns would decrease. So option number A and B are the right option. Now we will check what would impact on the rows. We know that return on capital would be decreased because for getting the loan, our capital employed value denominator will increase, so that's why ROS will decrease. So option number A is the right choice for MCQs number 33. Now we will move to the another challenging question of 34. Okay, Jimmy made the credit sales of 98,550 in each of the year 2021 and 2022. In 2022, his trade receivable turnover was exactly 2 days shorter than it had been 2020. What was the charge? What was the change in the total trade receivable in 2022? We know that both years have the same amount, but in 2022 it receives its value 2 days before it. So first we need to calculate 98550 divided by 365, so it would be 270 per day. It would be calculated. So how we gonna calculate? For 2 day, 270 multiplied by 2, it would impact 540. So now the question is, it would increase or decrease. So it will receiving earlier, so receivable days would decrease by how much amount? For 540. So option number C is the right choice for it. So this is how we have done it. Now we will move to the last question of this paper. Which characteristic of financial statement, this is an easy question, and required that financial statement be clearly presented and assume that the user of the financial statement will have a reasonable knowledge of accounting, comparability, relevance, reliability, understandability. We know that we prepare those information for understanding. So option number D is the right option for this part of the question. Okay, I hope that you have get the understanding of this paper. If you do need to ask any question, you can ask in the comment section, and don't forget to like and subscribe my channel. And if you want to If you want to me to solve any other paper, you can ask me in the comment section as well. Thank you for watching this video. Allah Hafiz.